Good evening, everyone. Welcome to the webinar. It's been a very interesting Christmas season, as I'm sure you're aware, both from a South African point of view and also from the point of view of overseas, the world. So we're going to look at a lot of different things tonight, and I hope to be able to give you some good background there. Of course, the big thing that everybody's talking about is what happened on Wall Street. If you look at the chart in front of you here, you can see that Wall Street has undergone quite a substantial, quite a sharp correction that has basically taken it back to this upper trend line, this upper channel line. Now this channel that you're looking at here has been in place since the beginning, since way back, and since March 2009, in fact, when the S&P 500 bottomed at 666 in March, the beginning of March. So we've got these two trend lines. This is the lower trend line. As you can see, it's got three touch points: the original starting point, and then the first correction and the second correction, and we're right up here now. And then the upper channel line is more or less parallel to the lower channel line. And now we had a breakout from that over here, and I'd like to examine that breakout in a bit more detail. So now I'm going to go to the 6-month chart and just pull this in so that you can see roughly what we're talking about. Okay, so there's the breakout. It's actually a little bit further over, isn't it? Here, this candle here, and you can see how it broke above the upper channel line and then came back, found it, and then bounced off it. So the upper channel line from being resistance became support, and then it progressed up very, very steeply, and then we've had this very sharp correction here. Now, from the top of this rally to the bottom here is about 7.8%. And just to put that into perspective, the last correction of any note that we had was the one in 2016 in February, and that was 14%. So this market has gone down so far 7%, 7.8%. That means that there is obviously further downside potential, and obviously we're also inside these channel lines. So you can see once we get inside the channel lines, there's quite a lot of distance it could go before it reaches the lower channel line. But you'll also notice that the long-term moving average, which I've put here, this is actually a 300-day moving average, is rising steadily, which indicates that this downtrend is hardly a new bear trend. It's far more likely to be a correction. Now let us consider a little bit of the background. And here I'd like to just draw your attention to a new section that you'll find on your website, on the PDSnet website. In the same section where the articles are generally posted, we've got a thing there called our background approach, and this outlines how we see the market. I did go through this last year in June, but it's based obviously on the idea of the Kondratiev report, the Kondratiev wave, which is a 54-year cyclical wave. Nikolai Kondratiev, the Russian economist, first identified it 4 years before the 1929 crash, and using the wave he was able to predict the 1929 crash fairly accurately. And obviously that idea, you can read more about it on that our background approach, which is on the website now under the article section. But also you can look up Kondratiev in the glossary, and you'll find his name there, and you'll be able to read more about him there. But that 54-year cycle is basically the economically active lifespan of the average person. So the average person becomes economically active in their early 20s, and they cease to be economically active usually in their mid-70s to late 70s. So this 54-year cycle, Kondratiev traced it back 300 years. Subsequently, analysis has found it on the Hammurabi Stela, and that's about 2,700 years ago. So they talked about a 50-year cycle back then, which they called the Jubilee Cycle. Essentially, it's a cycle of debt cleanouts. And periodically, society allows debt levels to just get too high, and then there's a big clean out, a sort of debt clean out, like happened in 1929. And that has a huge impact on commodity prices. So the prices of all commodities collapse in such a situation. So you need to go back and read that approach that we have to investment, because it's very important. There's a lot of history in there and a background, which I don't really want to go back into now. Just to say that obviously the key in our explanation is that the Kondratiev wave was interrupted by monetary policy under Alan Greenspan. This policy was suggested originally by John Maynard Keynes in his book in 1936, and again you can read all of those things in that approach. And then for the first time, Alan Greenspan put that into effect in 1987, and the results were very successful indeed. The 87 crash lasted only 6 months, and then it turned and it went straight up, and 18 months later it made a new all-time record high. And I'm talking about the S&P 500 here. And then obviously as a result of that, Alan Greenspan became very famous, and he was regarded as a total guru, and he continued to do the same thing again and again any time that the stock market crashed. What did he do? He arranged for the biggest countries in the world, the biggest economies in the world, to pump money into their economies to compensate for the wipeout of wealth on their stock markets. And he did it for 25 years while he was governor of the Reserve Bank. Then he handed over to Ben Bernanke, and then Ben Bernanke handed on to Janet Yellen, who's also coming to the end of her term now. But those two followed on exactly in the same pattern as Alan Greenspan had done. So they injected funds into the world economy. Now, every time they injected funds, the amount they had to inject became bigger and bigger and bigger. So in the 1980s, it was tens of billions of rands. In the 1990s, it was hundreds of billions that they had to inject. In the noughties, as you will know, 2008, we had the subprime crisis. They didn't actually have enough money to turn the situation around. So what they did is they started printing the stuff. Just the same as Robert Mugabe was printing up in Zimbabwe, they printed the money. Altogether, America printed some $12.5 trillion and put them into the economy. Other countries followed suit. In fact, Europe is still printing and injecting tens of billions of euros a month into the European economy. They are starting to taper it off, but they've been doing it for some time. So a huge amount of cash was pumped into the system. And of course, that cash is what has caused the trend that you see on your screen. This long-term bull trend that started nearly 10 years ago over here in 2009, and it's just been going up steadily since then. That has been caused by all that cash that was pumped into the system. So now we are here, and we broke above. Obviously, all that cash is stimulating the American economy. The American economy right now is producing between 200,000 and 250,000 new jobs every month. And the growth in that economy caused the stock market to rise very sharply. It broke up through the upper channel line here and went shooting up to new record highs. In fact, over this 10-day period here, from there to there, the S&P 500 rose 100 points, 10 points on average per day. Now that was unsustainable. And we did write an article about this, which we called The Bigger Fool. And that article was published on the 28th of January. You'll find it amongst the articles on the website. And at the end of that article, we said this: but we also believe that the S&P 500 simply cannot continue rising at the rate of 100 points every 10 days. So either there will be a sideways market or a correction. That's what we said. And we said that on the 28th of January this year. So let's just go and find that date. That's the 26th, 27th, I've got it wrong. We said it actually over here, right at the start of this. That I think was just luck, but we were looking for a correction because this rapid rise here, this acceleration, the final acceleration here, was just too fast. Something had to break, and now you can see we've had quite a sizable correction. But the correction is healthy. It's a healthy correction. It brings things back more to the levels they should be. It gives everyone a time to sort of breathe and to see the situation in more perspective. Of course, we don't know yet that the correction is over. We don't know that yet. Despite the 1.74% jump on the S&P 500 yesterday, and I believe it's a little bit up tonight as we speak. I can actually go there and have a look and just see if I can see it for you. Yeah, here you go. It's up a little bit. It's up about, well, it's up quite a lot actually, 0.7%. That's quite a lot. So it's recovering quickly from this downward trend. It's above 2,700 again. So that's quite interesting. All right, so we've got an S&P that's perhaps up here somewhere where the arrow is on your chart now. So it looks like there might be a bit of a recovery, but I just want to warn you that sometimes these corrections have what's called a bull trap and or a dead cat bounce. You know, they say that if you drop a dead cat from high enough, it will bounce, but it doesn't mean that it's alive. You know, it's still dead. So this correction could continue, and obviously you have to make a decision about that. But in our view, the correction, however long it lasts, represents a buying opportunity. In other words, we don't see this as the start of a new bear trend. We see it as a buying opportunity. And a lot of the shares on the JSE have come down quite heavily, and I think that there's some very good buying opportunities in the market. A classic example, of course, is Capitec, which we'll talk about later because of the Viceroy story. We'll explore that in a little bit more depth. What has caused this correction? Well, probably, strangely enough, the strength in the US economy. When the latest job report came out, it was so strong that the investors thought, gee, with such strong job report, with so many new jobs being created, the Reserve Bank here, the Federal Reserve Bank, is bound to push interest rates up. And that's what caused the sell-off, the nervousness about the rise in interest rates because of the very strong economy. They said the Fed is going to put its foot on the brake and try and slow the economy down, and that's going to be bad for stocks. So that's why they sold off. But the underlying growth in the American economy hasn't stopped. It continues. Next month they will produce another 200 or 250,000 new jobs. The unemployment rate there is at record low levels. And that's because all that cash that was printed and that's sloshing around in the system is now starting to be spent. People have recovered from their fear that came about with the subprime crisis in 2008. That fear is disappearing rapidly, and as it disappears, people are starting to spend. And as they spend, they of course push the economy up, they create bigger profits. Those bigger profits mean that companies are employing more people, and that's an upward cycle, an upward spiral, if you like. So what we're suggesting is that you go to our market and you look for bargains. If you look at our market, the JSE Overall Index, you'll see here, I'm just waiting for it, there it is. It's come off quite significantly, but you can see the long-term bull trend exists in the JSE just like it exists in every major stock market around the world. And it's come off quite nicely, and this represents, in our opinion, a buying opportunity. Right, let's move on. Obviously, the big news since I spoke to you last year is that Mr. Ramaphosa has been appointed as the head of the ANC. He's not yet the president, but obviously we're all waiting for Mr. Zuma to resign. He's proving to be very stubborn, but I'm sure that sooner or later, probably within the next few weeks, Mr. Zuma will resign. Mr. Ramaphosa is not yet in a strong position. His position is quite delicate. So although he's head of the party, there are still a lot of Zuma supporters around, and obviously in Parliament and elsewhere, even in the NEC, people like Duarte and Magashule and so on. and he has to tread very carefully, which he is doing, and he's consolidating his power and his influence. One thing he has done, though, is he's appointed a new board for Eskom. He's dealt with South Africa's most serious problem right up front. That really needed to be done badly, because Eskom has got about 250 billion rands worth of debt, which the South African government has guaranteed. They've got a total of about 350 billion, but 250 billion of that is guaranteed by the South African government. Now, we just can't afford for that debt not to be rolled over. So he put in a new CEO there. He's a guy called Hadebe, and this guy has got a long track record of being very good at successfully turning government departments around. He turned the land bank around about 10 years ago, and he's a really good guy, really smart and honest. Anyway, by putting in the new board, the local banks have once again agreed to lend money to Eskom, and Mr. Hadebe has managed to secure the 20 billion rand that he needed to meet Eskom's immediate needs. And obviously now, having put the immediate fire out, he's going to look at the problem of Eskom's debt more carefully, and he's going to try and bring it down. I think that's going to be their priority. And one of the ways he'll bring it down is by getting all the government agencies like the Development Capital Bank and so on, the DCB, and others who have injected funds into Eskom to convert that loan into equity. So they will then be shareholders, and of course that will bring down the debt and make Eskom's debt to equity position look far better. And of course all of these things are reflected in the rand. So now I'm going to go and look at the rand. Excuse me. Right, so here's the chart of the rand. Put a little bit more data on the screen. There you can see where Pravin Gordhan was fired, over here where I'm pointing to now. And obviously after he was fired, the rand started to weaken again, weakened quite sharply, and then it reached a cyclical low point over here, and then started to strengthen. Now what's interesting about this is that it started to strengthen about a month before the ANC's electoral conference, right? So the big currency speculators of the world started buying up rands and selling other hard currencies like the US dollar and getting into the rand market. And they did this about a month before the ANC conference. You can see the ANC conference, I've marked it on the chart here, and then Ramaphosa was elected over there. But it's quite clear that these big currency speculators knew that Ramaphosa would be elected a month before the event, because they pumped literally billions of US dollars into the South African economy a month beforehand. And this is our thesis here. We believe that any major event is known to the big inside investors all the time. And that's actually why you've got to follow technical analysis, because you can't know that inside information that they know. I mean, the currency market in this country for the rand dollar currency market, that cross trades about 50 billion rand a day, every single trading day. So the only players in that market are huge people, big international currency speculators who've got billions of dollars at their disposal. Now these people can easily afford to pay somebody quite a lot of money, like 10 million rand, to give them the inside story on what's going to happen at the ANC conference. So they get that information before everyone else, and of course when an insider has got good information, he trades on it, and that causes the graph to change. It causes the price to move, and obviously it sometimes influences the volume. And we've seen that before in these discussions when we looked at Orion Minerals a while back, and I wrote an article about Orion Minerals. There you could quite clearly see the insider trading taking place before the rest of the market knew what was going on. So in my view, the reason you have to study technical analysis, charting, is so that you can get an idea of what the insiders are doing at any point in time. So then Ramaphosa was appointed, right, elected. And after that, there was a little bit of sideways movement and then further optimism, which took the rand down below 12. And then there's been a little bit of weakness associated with Jacob Zuma's reluctance to leave. But I know that today the rand has strengthened further back down to these kind of levels around 1190. It was trading today. So it looks like the optimism is back in place again. You see, if you look at the other shares like Steinhoff or EOH, let's take the Steinhoff example, because I think it's a very important example for private investors to look at and to consider. There's a lot of lessons to be learned here. Just waiting for the chart to load. Okay, there's Steinhoff, and you can see the collapse. It fell from about 55 Rand down to 5 Rand. And then it found a obviously strong support here at 465, which we commented on. But let's look at the bigger picture. If we go back 5 years and look at this chart, well, let's actually even just go back 2 years. You can see that there's an incredible triple top here, where the share made a top there at about 96 Rand. Then it tried to penetrate that top over here and only got as far as 94 Rand 79. And again over here, only this time it only got as far as 93 Rand 60. So you've got three tops, each one lower than the previous one. And the failure of these three tops to penetrate above that 96.85 was a clear technical indication that this share was in a downtrend. You can see the sharp downward candle that occurred after it failed to go higher than 93.60 in this cycle here. And then, of course, it's been trending down for a long time. I mean, this happened way back in August 2016, so it's a long time ago, 18 months ago. And then for the next 18 months, the share trended down, and then over here, the Viceroy report came out, and it collapsed, right? But anyone who's been following the rules which we teach here would have stopped out of the share probably at about 80 Rand a share, somewhere around there. They certainly wouldn't have still been holding it when this collapse happened over here. So that's the key. And you could say the same thing about other shares. Why does this happen? It happens because obviously over here, this is a long time ago that this peak happened. It happened in March 2016. And we know that Asher Bobot only resigned later on, somewhere over here. He was the CEO, and a very good CEO. And then after that, the market, the share just trended down, and then finally collapsed. So the insiders here knew something, and they traded on that knowledge, getting out of the share. And eventually, obviously, Viceroy came out with their report, and that's caused the market to really collapse. So I just want to point that out to you. You've got to study technical analysis to stay on top of what insiders are doing. Let's just quickly look at EOH, because that's another good example of a share that went through a bit of a collapse. But long before that collapse started, the share was already trending down. And if you were using a stop-loss strategy, you would definitely not have been caught in EOH. Here's EOH. There you can see the collapse that I'm talking about. And I just want to again put more data on the screen. Let's go to a 2-year chart. Is that already 2 years? Looks like it is. Go to 5 years. All right, that shows the picture much more clearly. Here's a 5-year chart of EOH. There you can see the collapse. Now note here, a double top. Do you see this double top here? One top there, another top here. And after that, double top. The failure of this second top to penetrate that high of the first top is bearish. And the market trended down, and then collapsed. But anyone who with a stop-loss strategy would have been out of EOH a long time ago at a much better price. Of course, EOH has recovered, but I don't like the shape of this graph. I think it's still trending down. I think this downward trend is going to continue. So right now, I'm not a buyer for EOH, but you can see how the insiders have liquidated their positions early, and you need to climb onto their backs and do the same thing. All right. I know that I've used up a lot of the time now, so that I'm just going to touch on a few other points here. The first one I want to touch on is the Bitcoin story, because I know that everybody got very excited about Bitcoin a little while ago. And I just want you to see the chart, because I did point it out to you. I wrote an article about Bitcoin, and we published it on the 8th of December last year. So our article was published here. Okay? And what we said there is that the Bitcoin market is a bubble. It is a bubble and it will burst. And sure enough, boy, did it burst. It's still going down here. It's actually fallen more than 50% from its high point here. And we're right down at this level now. So you need to be sensitive. How did we know it was a bubble? Well, if you put a 5-year chart on the screen here, you can see that this chart, this graph moved sideways for a long time and then moved vertically upwards. This is a classical exponential chart that results in a bubble, and bubbles in the stock market or anywhere, in fact, any kind of financial bubble is going to burst. So anyway, that is Bitcoin. That's what I wanted to say about Bitcoin. All right, now I'm just going to talk a little bit about commodities. Let's take a look at the, well, before I go on to deal with commodities, I'd just like to say that obviously you will get the notes on the website as soon as I finish this presentation. And there's an awful lot more in the notes than I'm going to talk about. So please do make a point of going back and reading through those notes. And go and find that background approach of ours on the website and read that as well. It will give you a very good understanding of where we're coming from. All right, I'm going to start with the zinc market. Zinc is a very interesting mineral. And the interesting thing about it is that since 2016, since the beginning of 2016, the zinc price has doubled. Okay, so I'm just going to show you that. You can see this is the start of 2016, January 2016, the zinc price has doubled. The only way you can really participate in zinc is with Orion Minerals. They are the only South African company that is really currently exploiting the zinc market in this country. And they listed a little while ago, and they are sitting on the stock exchange, so you need to do a bit of research there if you want to take advantage. The next thing I want to talk about is lithium. Now, lithium, we don't have a chart for lithium or cobalt, which are the two commodities which underlie battery technology. Batteries are going to be big news in the future. They are becoming bigger and bigger news. There are batteries in everything, from your cell phone, and soon your motor car will be powered by a battery. So electric cars are going to be everywhere. But they say that by 2022, 5% of the motor cars on the road will be electric. And I'm sure that trend will accelerate. Electric cars are getting cheaper. They're certainly faster than petrol engine cars. And of course, they don't pollute the environment. The only way to get into these battery minerals, that I call them, is on the JSE, is through a share called Tawana. So I'm just going to put that up. Wait a minute, I didn't quite get that right. TAW. All right, so Tawana is the one to get to. This company mines lithium and cobalt, and it does it in Australia. But it is listed here. They have a mine at a place called Bald Hill in Australia. And here you can just see the share price. Just put a bit more data on there. You can see the share price has doubled in the last 5 months. So obviously this is the way of the future. The internal combustion engine is not going to be with us much longer. Now I'd just like to comment on gold. We don't need to go to the chart, because what I want to say is that there's a London consultancy called GFMS, and they have done some careful research in the gold market, and they've pointed out that South Africa is the most expensive gold producer. In other words, our cost of extraction for 1 ounce of gold is the most expensive in the world. It costs the average South African mine, $1,184 to take 1 ounce of gold out of the ground. And that, by the way, has increased by $54 just in the last year. If you compare this to the next cheapest producer, South America, their average cost is $866 per ounce. So, and everybody else is cheaper than that. So even if Cyril Ramaphosa did not, even if Zwane did not actually attack the mining industry in this country, the gold industry here is basically dead. And until we get a new technology which will enable us to mine at deeper levels, I think there's really no point in going anywhere with gold. I seem to have some kind of technical problem here on my screen. Something is doing something here. I don't really know what it's doing, but anyway, what I need to say doesn't require a chart at the moment, so if you'll just concentrate on my voice. I want to talk now about Viceroy. Viceroy is a US company that specializes in shorting listed companies. So they go out there and they find a company, a listed company on one of the big stock exchanges that they think is a little bit in difficulties. They do a research report, but before they do the research report, they usually go short on the share. Then they publish the research report, just like they did with Steinhoff. And the share price falls, and they buy back the share at lower levels, and they make a killing. They've done that with Steinhoff. They've attempted to do it with Capitec, but we believe that their efforts with Capitec are not working. Their report is not properly researched, not nearly as good as the Steinhoff report, and every indication is that Capitec is surviving this and will go up again back to the levels it was at, above 1,000 Rand a share. At the moment, it's trading in the 800 Rand range, 840, 830, 840 Rand a share, and we believe that it's good value at anything below 900 Rand a share. All right, so that's Capitec. Now I need to put another chart on the screen, so let's give it a go. Not sure if I can. There's something going on here. Can't get another chart on the screen. Okay. It's doing something. The computer's doing something. But I'm not a technical whiz kid. So I'll just talk about the things that I want to talk about. I'd like to talk now about Dis-Chem. The big thing that happened at the end of last year was that the major shareholders of Dis-Chem, and particularly Mr. Saltzman, who has got the biggest part of the shareholding there, came in and they sold 1.1 billion rands worth of Dis-Chem shares. And the market was a little bit disappointed. The share went down. They didn't sell the shares out of Dis-Chem. They sold their own shares in Dis-Chem to another party. So, of course, you might ask, well, why would the major shareholder sell his shares? The reason is that he wants to reduce his risk. He wants some cash in the bank, and he wants to reduce his exposure to Dis-Chem. Obviously, all of his capital has been tied up in Dis-Chem while he's been building it. The Saltzman family has been behind Dis-Chem for decades and decades, and now they've sold a little bit of their holding, but they still control 52.7% of Dis-Chem. The difference is that now they've got 1 billion rand in cash in the bank. So I can really understand why he did that. Of course, Dis-Chem's major competitor is Clicks. They had a very strong Christmas, and if you look at the chart, you'll see that they're in a very strong bull trend. Their Christmas sales were very good, mainly because of that 3-for-2 special that they have on there regularly, and they really are doing very well indeed. Other shares that I want to talk about, AEEI they've obviously a new listing. They've spun out Premfish, and now another new listing called AO. AO is interesting because it's got 30% of British Telecoms. And both these new listings we think will do well. But the share I want to draw attention to is AEI itself. That is a very good share indeed. So look at that one. Okay. Woolies has obviously been through a very tough time over the last couple of years. And particularly they seem to be suffering from the acquisition of their 2 Australian ventures. That's David Jones and Country Road. And the share price has come down in accordance. But I have a lot of faith in Ian Moyer, who's the CEO of Woolies, and I think that he may well find his way out of these difficulties in due course. Remember that the world economy is going into a boom phase, and really Woolies is in a very good position to benefit from that. But just wait until it breaks up through that long-term downward trend line that you'll see if you look at the chart. Okay, Shoprite. Not a bad set of results. Turnover was up 6.3%. What was interesting is that their gain in turnover didn't come from the rest of Africa. It came from South Africa. And what's particularly interesting about that is the performance of their home division. The home division suddenly produced a 10.8% growth. That's interesting. I mean, the home division really is selling things for the home, right? So this is something that people don't have to buy. It's a discretionary purchase. It's not like food, which you have to have. So it's a defensive kind. It's a cyclical kind of area of their business. So anyway, that's Shoprite Checkers. Lewis, I wanted to draw attention to Lewis stores. They've been under the whip also since 2015 because of some shady loans and insurance policies that they had, and they've been under the whip. So the share price has come down quite a long way, but now they look to be improving. The latest set of results is quite encouraging. And remember, if this economy does take off, which I'm expecting it to take off and to follow America and other world economies up, then Lewis is one of the companies that will probably benefit the most from that. Finally, I'd like to talk about Sasol. This is the last share that I want to talk about. Obviously, you mustn't forget that Sasol is heavily affected by the Rand. So the Rand strengthening by 2 Rand or more than 2 Rand to the US dollar had a negative effect on Sasol. But Sasol is about 81% complete with its ethane cracker. 81%. And that could be a game changer for them. It could result in a re-rating of the share. If you look at the chart on Sasol, you'll see it's been oscillating between a resistance level at about 490 Rand per share and support at about 360. It's now moving up towards that 490 Rand resistance level. If it breaks above that, then we expect very strong growth from Sasol. Remember, though, that 60% of its turnover still comes from oil-related products. So bear that in mind. And obviously also bear in mind the effect of the Rand. Well, folks, that's about all I've got for you tonight. I'm sorry about our little technical problems at the end there, which prevented us from showing you charts. I'm sure you can go and find the charts of the shares that I've talked about, though, on your own system. And we'll try and do it better next time at the next presentation. Otherwise, remember, email in your questions. We'll be happy to answer them if you've got questions. And we'll see you again on the first Wednesday of March.